Guys, demand for chips is falling. You have Micron, NVIDIA, AMD, Intel. They're all saying that demand is going to be falling. We're going to go and look at Micron specifically in this video, put a valuation on them, and at the end, we'll hit some trading. But right now, let's look at what Micron said. Micron is warning there's going to be evidence that there is collapsing chip demand. We have seen this across the industry. Intel was the first one to report, and everybody panicked. And the big thing for me, as an investor in Intel, I was saying, okay, I'm not going to panic just yet. I want to see what NVIDIA reports. I want to see what AMD says. I want to see what Micron says. And all across the board, it seems like chips are slowing in demand. Not to mention, we also have those issues of supply chain issues. So Micron, leading U.S. maker of memory semiconductors, became the latest chip maker to declare its falling demand and warned that there's going to be a big decrease in revenue, just like all the other ones. The company said earlier on Tuesday that fourth quarter sales are expected to be low, and this was after their earnings report. They came in and gave more forward guidance going forward. So they are expecting to have a big hit in revenue, which is not totally surprising following NVIDIA and Intel, highlighting the speed in which demand is evaporating. So there's a story here that I read on the morning show, and the title was, NVIDIA is just one sign that the PC boom is over. When we come down here, this is something that I think is really important when we look at chips. And I think that a lot of people are missing this big time. Prior to 2020, PC sales were either down or relatively flat for years. So the question becomes, is this decline in revenue actually this big tragic thing? Or are we just going back to normalcy of what it was in the industry before? Guys, think about this. We had people sitting at home for COVID, literally doing nothing, / working from home. What are they going to do? They're going to go out and buy PCs, laptops, etc. That is going to be a major spike in revenue, in profit. If that eventually pans out and it's going to start to teeter because this was an anomaly spike, well, things are just going to come back down to normal, and then they're going to hit status quo and go sideways, and maybe there's going to be some growth in there. But in the entire industry, there were a lot of issues that there was no growth going on. Look at this. According to the IDC, worldwide full-year PC shipments grew by just 2.7% in 2019. The last time that the industry saw full year-over-year growth was back in 2011. So just because these things are shrinking doesn't mean the world is over. It just means it's going to go back to this very, very, very slow growth. The boom is definitely over. We will not see that double-digit growth. We actually expect to see declines of 9%, and that is just specifically for NVIDIA. Now, we had that chip bill come out. Micron is going to invest $40 billion in the United States chip manufacturing. This is from the Chip and Science Act that was signed into law just a few weeks ago, or maybe it was last week. I have no idea. They said that they are going to put $40 billion in the United States between now and 2030, creating 40,000 jobs in the United States and 5,000 highly senior jobs, technical jobs, etc. So the question becomes, is this a dead company? Not even is this a dead company. Is this a dead industry? Well, of course it's not, because everything that I'm looking at in this entire room has something to do with a chip. And if it's not a chip, I'm going to try to see. This pen doesn't have a chip in it. But whatever machine made this, it had a chip in it. So every single thing is chip involved. So I would not worry too much. I would just, when I go to Stock Analyzer tool to put a valuation on this, let's just tame this. Let's go and look at the previous number. So right now, let's go and look at the income statement for Micron. Remember, this is a stock that Monish Pabrai has just been buying for years and years and years. He saw something in this a very long time ago. Let's look at their revenue growth. So revenue growth started at $8 billion in 2013 and ended at $31 billion. And I'm looking for consistency. So it was consistent growth, a little bit of a drop here, big, almost a doubling here. So it's inconsistent revenue growth. Now, I'm not going to penalize them for 2000 and when you got this big jump in 2019, 2020, because there was, of course, COVID. Let's look at their net income. Is that as inconsistent? Net income is definitely inconsistent. So this is another thing. Maybe this is an industry-wide thing, and I do know this is an industry-wide thing because I've looked at other companies. Shares staying consistent. They are buying back shares in some capacity, but they diluted earlier. Total current assets of $21.5 billion. Total current liabilities of 6.92. I like that. Let's look at their long-term liabilities. Long-term liabilities of 8.93. So I am okay with that. Do they use acquisitions to grow in any capacity? No, that's great. Okay, let's go to Stock Analyzer and run this thing. Let's see what we have. Revenue growth. Okay, so here's the thing. Remember, we talked about how the industry is going to be slowing as a whole or going back to normal as a whole. Where are we going to go with revenue growth here? So let's account for the last couple of years have been a little bit rich, a little bit skewed. So let's put in some numbers. Let's go with 4. I'm going to go 4, 7, and 10. Remember, 4 is pretty low, but let's stress this. Let's stress the situation and see what we come out with. Profit margin. I will go 23, 25, and 27. It's a big spread, but let's see. Free cash flow margin, I'm going to go lower. I'm going to go 10, 12, and 14. PE. I'll give the 14, 16, and 18 PE. Could be a little bit strong. I mean, how much more growth can a company like this have? That's a question that needs to be asked. And I will do a 12.5% return because I am not terribly concerned that this is going to be some risky investment. I think that the staying power for Micron is definitely around. So looking at this, let me blow this up for you. I don't think you could say blow this up on YouTube, but that's okay. If you go from a discounted cash flow, $34 to $90. You're sitting in that range right now at about $63. If you go after multiple of earnings that we put in, $82 to $173. For me, I think we're closer to this level, this discounted cash flow, somewhere in that 50 range for Micron. And that's where I would begin looking at shares. Guys, my name is Mo. I'm a value investor with Paul. I also teach trading. So if you've stuck around this long, awesome. And I'm going to show you some charts right now on how you can trade Micron. It's just a little bit, this is a way where if this valuation is a little rich for you, you can be involved in this stock. So right now looking at Micron, this date was January back here. So I am not going to lie. I'm a little concerned about this 50% stock that could be developing. And a 50% rule is you have a high, 52-week high, 52-week low, and all of this area, this black area, that's all called overhang. And the stock price is just negatively pushing down on you. Those that lost all this money on the way down, they're saying right here, if I can just get a little bit of my money back, and they get their money back a little bit, and then they start selling. And it just starts creeping up, and you'll see it. You'll check out Boeing, check out CCL. It has a very difficult time breaking through that 50% area. But with that being said, it does have a lot of room to run from $63 to maybe $75, $77. Keep a watch on this. If you get this red and yellow line into the sweet spot, you could really go for a nice run here if, of course, you have great volume coming into the stock. My only concern is all of these major moving averages. You're stuck right here at the 25, the 50. You're below the 100. You're below the 200. So what is it going to take to push through those? Nothing but volume. Nothing but volume. But the good news for you, this is a stock that has a lot of volume, has a lot of daily activity. So, guys, if you want more information on the 8-pillar analysis in total, click this video right here with Paul. I'll catch you on the flippity flop.